Hello and welcome back to this episode of the Day Trading Bootcamp. In this episode, we are going to discuss equal highs, equal lows, and low resistance liquidity. So we're going to start off with equal highs. They will look like this. Price will make a high. Then price will go to the same tick without sweeping it. We could go a little lower, not to the exact same tick, but a little lower and still be equal highs around here. And these are pretty high probability to be swept by the market. So when price is going to hunt some type of liquidity, say there's sell side liquidity in a higher time frame PD array. I will discuss PD arrays in a different episode, but let's just say this is a higher time frame fair value gap. There is sell side liquidity resting inside the fair value gap. Price hunts the liquidity, and then on the way down, as you know, trends, lower highs, lower lows in a bearish trend. So we're putting in highs, we put in a high, put in a high. We put in a high, we put in a high, we put in a high on the way down, lower highs. While we're doing that, we're also generating liquidity to be swept on a move up. So all of this, there's now liquidity, there's liquidity resting above all of these highs. So traders that got in short, they got in short like here, they put their stop losses here. Traders got in here, put their stop losses here. Traders got in here, put their stop losses in here. You get it. So when we see those buy side liquidity points, the highs being generated, we can label it as low resistance. This is low resistance liquidity. So when price starts to push up, it can easily continue to go through each high because there's more liquidity to target to the upside. So it's low resistance. So now this is an example of equal lows. So price put in a low, started to go up, price came down one more time, put in an equal low, and then we start to push up in a bullish uptrend to target some type of liquidity in a higher time frame PD array. We target the liquidity on the way up with the bullish trend. We're putting in lows, putting in lows, putting in lows. This is low resistance. Then we get a confirmation that we're going down, and price makes a strong move, low liquidity, low resistance liquidity run. Once you start noticing it in the market, you'll start to see it appear more times and it'll get pretty easy to recognize. So in this example, we can see we have an order block here. Price starts to push up. We then start to put in equal highs. Price makes equal highs here. We then start to have a downtrend to sweep liquidity. We start to push down. We put in a high. We put in a high. We have a high here. We have a high here. All these are highs. Price sweeps the liquidity. We then run through all these highs that were generated. Price pushes down one more time. And then we consolidate before going all the way through the equal highs to sweep liquidity. So that one was on the 5-minute time frame. But price, like I said, is fractal, which I will go over in much more depth in a later video. But price is fractal. So these concepts will appear on any time frame. This was just a 5-minute. Let me find another example on a different time frame. So now there's a lot to look at here. I'm now on a 4-hour time frame. 4-hour time frame, you can see, and we put in a high. We have buy side liquidity, and you can see we're starting to generate highs. Look at all these highs we're putting in. I marked them all out. All these highs, and while we're setting up those highs, we were also setting up these lows to be swept, sell side liquidity. Price was consolidating up, slowly pushing up, and then we get a strong move down to sweep all that generated liquidity. We sweep through all this liquidity. We then go down to continue to this liquidity. We sweep that liquidity. And where do we reverse and go to? We sweep all this generated liquidity up here. And then we can see with these highs being generated, we can zoom into here. And as we can see, we have been generating highs on the way down. So this is the 4-hour time frame. If I zoom in, so I'm now zoomed into a 15-minute time frame. 15-minute time frame. And we have been generating buy side liquidity. Where I zoomed in, we were generating buy side liquidity to go higher. This is the top buy side liquidity, and we've been putting in all these lows on the way down. And look right here, we have equal highs, And if I zoom into here again, you can see, I don't have to even zoom in, but we're generating highs throughout here. We're generating highs, equal highs. All of this, if I zoom into a 5-minute, 1-minute time frame, this exact thing is this on a higher time frame, which is going to hunt more liquidity. This is building up sell side liquidity on a different time frame. By pushing up, we're putting in sell side liquidity on a different time frame. So this is what I mean by price is fractal. These concepts work on every time frame, and we can use them to get more precise trades and understand where the market is going. So that is this episode on equal highs, equal lows, low resistance liquidity, and I also covered generated buy side and sell side liquidity in this episode. So this episode was a little more complex. We're starting to delve into more complex concepts. So if you have any questions, please leave them in the comments. I want to make sure I'm not going too fast in this bootcamp. I have about 65 days planned out of this bootcamp, but I don't want to rush it too fast, and the concepts are going to get more and more complicated. And there's also going to be some more simpler things, but this is just something that is a building block to ICT. We're going to be targeting liquidity. And yeah, thank you for watching this video. I hope you enjoyed it. I'll see you for the next one tomorrow. Peace out.